Look at your last 10 trades, or really look at them. If I had to guess, I see a pattern, and it's ugly. You see winners you cut way too soon because you were terrified the market would take the money back. You see losers you held onto for days, praying to the trade-in gods for a break-even that never came. You see entries you took just because you were bored. You see other entries you took because you saw someone on Twitter posting a massive gain, and you felt that sick feeling in your stomach that you were missing out. And then there are the trades you didn't take, the perfect setups, the ones that matched your plan exactly. You stared at the buy button, frozen, paralyzed by the fear of being wrong again, and then you watched the market rocket off without you. Does that sound familiar? If it does, welcome to the 95%. Welcome to the meat grinder. Welcome to the group of traders who provide liquidity for the professionals. We have all heard the statistic, 90%, 95% of retail traders fail, they blow up their accounts, they quit. But here is the question nobody asks. If everyone has access to the same charts, the same indicators, the same news feeds, and the same YouTube tutorials, why is the gap between the winners and losers so massive? Why can two people look at the exact same double bottom pattern on the exact same software? One guy sees a screaming buy opportunity and makes a month's salary in an hour. The other guy sees chaos, hesitates, buys the top, and loses his rent money. It is not the software. It is not the indicator settings. It is not some secret Telegram group. The difference between the 95% who bleed cash and the top 5% who print money on demand is entirely invisible. It's the operating system running between their ears. Over the next minutes, we are going to perform brain surgery. We are going to tear apart the flawed mental framework that is keeping you poor, and we are going to install the operating system of the top 5%. This is not about positive thinking. This is about survival. Let's begin. Before we can fix the problem, we have to respect it. You need to understand that you are not stupid, you are not unlucky, you are just human. And being human is the single greatest disadvantage in trading. Your brain was designed over millions of years for one thing: survival in the wild. It was built to run from tigers, find food, and seek certainty. It is excellent at keeping you alive in a jungle. But the financial markets are not a jungle. The financial markets are a counterintuitive environment where your natural survival instincts will get you slaughtered. The 95% trader brings their human survival instincts to the charts. The first instinct is the addiction to certainty. In the real world, if you do work, you get paid. If you put in the hours at your job, you get a paycheck at the end of the week. It is predictable. A equals B. The 95% trader brings this employee mindset to the market. They want to know for a fact that if they buy here, it will go up there. They spend years searching for the holy grail indicator, the one setting that doesn't repaint, the strategy with a 90% win rate. They are obsessed with being right. When they enter a trade, their ego is on the line. If the trade goes green, they feel like a genius. Their dopamine spikes. They feel validated. If the trade goes red, they feel stupid. They feel attacked. Their brain registers a losing trade the same way it registers a physical threat. This is crucial to understand. The pain center of your brain, the amygdala, lights up when you are in a drawdown. Your brain thinks you are dying. So what does it do? It screams at you to make the pain stop. How do you make the pain stop? You close the trade. You realize the loss just to end the psychological torture. Or, even worse, you move your stop loss. You tell yourself, I'll just give it a little more room to breathe. Why do you do that? Because as long as the trade is open, there is hope that it might come back. Your brain prefers the comfortable lie of hope over the painful truth of a realized loss. The 95% trader is taking small profits to feed their need for instant gratification and holding large losses to avoid immediate pain. They are literally programmed to cut their winners and ride their losers. The exact opposite of what makes money. There is another deadly virus in the mind of the 95%. It's the victim virus. When the 95% trader takes a loss, it's never their fault. It was the market makers hunting their stop losses. It was Elon Musk tweeting something crazy. It was the Federal Reserve rigging the game. It was their broker slipping them. Listen to me closely. The market doesn't know you exist. It doesn't care about your mortgage, your dreams, or your stop loss. The market is just a sea of orders executing against each other. As long as you blame anything outside of yourself for your results, you belong to the 95%. You are powerless. You are a leaf blowing in the wind. If you want to join the 5%, you have to accept radical, uncomfortable responsibility. Every time you click buy or sell, you are signing a contract with risk. You chose the entry. You chose the position size. You chose where to put the stop loss. You chose to break your rules. You are the problem. And that is the best news you will ever hear. Because if you are the problem, you are also the solution. So, how do we cross the chasm? How do we go from the victimized 95% to the dominant 5%? It requires a total shift in how you view reality. You need to stop thinking like a gambler and start thinking like the casino. Think about a casino in Las Vegas. Do they know the outcome of the next hand of blackjack? No. Do they panic when a player wins a massive $50,000 hand? No. The floor manager doesn't run down and scream at the dealer to stop dealing. They just smile and offer the player a free drink. Why? Because the casino has an edge. They know that over 1,000 hands, or 10,000 hands, the mathematics will play out in their favor. They don't care about the individual outcome. They care about the large sample size. The 95% trader is obsessed with the individual trade. This trade right now must win. This trade must pay the rent. The top 5% trader doesn't even care about the outcome of the current trade. They are completely detached from it. To them, one trade is just one data point among thousands. It means nothing. This is called probabilistic thinking, and it is the hardest thing for a human brain to learn. The 95% think in certainties. This is a support level, so it will bounce. The 5% think in probabilities. This is a support level. There is perhaps a 60% chance it bounces, and a 40% chance it breaks through. If it bounces, I make $3. If it breaks, I lose $1. That's it. That is the entire game. The elite trader knows that their edge is just a slight statistical advantage over time. They know they will lose 40% or 50% of the time, and they are totally at peace with that fact. Imagine if I gave you a weighted coin. I tell you that 60% of the time it lands on heads, and 40% it lands on tails. If it's heads, I give you $2. If it's tails, you give me $1. Would you want to flip that coin? Of course you would. You would flip that coin until your thumb fell off. Now imagine you flip it the first time, and it's tails. You lose $1. Do you get angry? Do you think the coin is broken? Do you think I rigged the game? No. You know it's just the 40% showing up. You immediately want to flip again because you know your edge is waiting. The 95% trader gets tails on the first flip, throws the coin across the room, calls it a scam, and goes looking for a new coin on YouTube. The 5% trader knows that losses are just the cost of doing business. You cannot have a retail store without paying rent. You cannot run a restaurant without buying food that might spoil. And you cannot be a trader without taking losses. A loss is not a failure. A loss is just a business expense. When you truly internalize this, the fear disappears. Why would you be afraid of a business expense that you already budgeted for? Now we need to build the framework. If you want to operate in the top 5%, your mind needs to rest on 4 unbreakable pillars. These are not trading strategies. These are mental barriers that protect you from yourself. The first pillar is the ability to feel absolutely nothing when you lose money. I don't mean you suppress the anger. I don't mean you pretend it doesn't hurt. I mean you literally train yourself not to feel the biological response of pain when your stop loss gets hit. How do the elite do this? First, they never, ever trade with money they cannot afford to burn. This sounds cliche, but it is the foundation of neutrality. If losing that $500 means you can't pay your electric bill, your biology will take over. You cannot out-willpower survival instincts. The 5% trader views their trading capital like video game points. It's just ammunition to play the game. Second, they pre-accept the risk before they enter the trade. The 95% trader sees a setup and thinks, how much money can I make? They are already spending the profits in their head. The 5% trader sees a setup and thinks, how much am I willing to lose to find out if this works? Before they click buy, they look at their stop loss distance. They calculate the exact dollar amount they will lose if they are wrong. They look at that number, let's say it's $200, and they say to themselves, I accept that this $200 is gone. It is already spent. Only when they have truly made peace with that loss do they enter the trade. When the stop loss gets hit 10 minutes later, there is no shock, there is no surprise. They already spent that money mentally. It's just a transaction closing. This takes practice. It takes desensitization. You have to expose yourself to small, controlled losses over and over again until your brain stops reacting to them as threats. You have to become emotionally dead to the red numbers on the screen. If your trading is exciting, you're doing it wrong. The 95% want action. They come to the markets for entertainment. They want the adrenaline rush of a fast-moving ticker tape. They feel like if they aren't in a trade, they aren't working. They are like machine gunners in a war movie, just spraying bullets everywhere, hoping to hit something. They over-trade. They force setups that aren't there. They churn their accounts and make their brokers rich with commissions. The top 5% are snipers. Snipers are bored 99% of the time. They lay in the mud for 3 days, waiting, watching, calculating wind speed and distance. They don't move. They don't shoot at shadows. They wait for the single, perfect, high-probability shot that matches their criteria exactly. Then they take the shot. Bam. One shot, one kill, then they pack up and go home. Real trading is incredibly boring. It is repetitive, it is routine, it's doing the same boring analysis, day after day, waiting for your specific edge to present itself. The 5% have learned to love the boredom. They know that boredom is where the money is made. Excitement is where money is lost. If you find yourself sitting at your desk, desperate to click a button because you want something to happen, step away. That is your inner gambler trying to take over. The elite trader is perfectly content sitting on their hands for a week if the market doesn't offer their specific setup. They define success not by how much money they made today, but by how perfectly they followed their rules. Did you follow your plan today? Yes? Then you were successful, even if you lost money. Did you break your rules and make money today? Yes? Then you are a failure, and the market will take that money back with interest tomorrow. FOMO, fear of missing out, is the primary weapon the market uses to destroy retail traders. We live in an era of financial voyeurism. You open Twitter or Instagram and you see some 20-year-old kid posting a screenshot of a 500% gain on some obscure crypto coin you've never heard of. Your blood pressure rises, you feel inadequate, you feel like everyone else is getting rich except you. Your brain screams, get in, before it's too late. So you buy the top of a parabolic move, and 5 minutes later, the dump begins. The 95% are driven by the fear that there is a limited amount of opportunity and they are missing it. The 5% operate from an abundance mindset. They have mastered JOMO, the joy of missing out. When they see a massive move that they weren't part of, they feel nothing. They don't care. Why? Because they know it wasn't their move. If a stock goes up 100%, but it didn't meet your specific entry criteria, it doesn't matter. It's noise. The elite trader knows that the market is an endless river of opportunity. There will be another bus coming in 10 minutes. There will be another setup tomorrow, next week, next year. They don't need to catch every move. They only need to catch their moves. They also know that most of those screenshots on social media are fake, cherry-picked, or taken on demo accounts. They don't compare their behind-the-scenes struggles with someone else's highlight reel. When you stop caring about what other people are making, you suddenly gain tremendous clarity on your own charts. The final pillar is self-trust. The 95% trader does not trust themselves. Deep down, they know they don't know what they are doing. Because they lack self-trust, they seek external validation. They subscribe to signal services. They join VIP Discord groups, hoping some guru will tell them when to buy and sell. They cover their charts with 15 indicators because they don't trust their own ability to read price action. They are looking for a daddy. They want someone else to take the responsibility. The problem is, when you borrow someone else's trade ideas, you also borrow their psychology, but you don't have their psychology. If a guru tells you to buy and the trade goes against you, you panic. You don't know why they bought. You don't know where their invalidation point is. You are trading blind. The top 5% trust themselves implicitly. They have put in the thousands of hours of backtesting. They have seen their edge play out over 10 years of historical data. They don't need an RSI indicator to tell them a stock is oversold. They can see it in the price structure. They don't need a guru to tell them what to buy. They have their own watch list generated by their own scanners based on their own criteria. This trust does not come from arrogance. It comes from competence. It comes from the hard, boring work that the 95% are not willing to do. When the 5% trader enters a trade, they are standing alone. If it wins, it's their win. If it loses, it's their loss. And they wouldn't have it any other way. You must remove the training wheels, delete the signal apps, leave the noisy Discord groups, strip your charts down to the bare essentials. It will be scary at first. You will feel naked. But it is the only way to build genuine market intuition. You have to learn to hear your own voice above the noise of the crowd. Okay, we know the problem. We know the solution. How do we actually make the transition? You cannot just snap your fingers and become a top 5% trader overnight. It is a process of deprogramming and reprogramming. Here is the practical roadmap to rewiring your brain for profitability. You need to stop trading with real money right now. If you are currently a losing trader, every dollar you put into the market is a donation to the professionals. Go back to a demo account. Or, if you must trade real money, reduce your size so small that the outcome is totally irrelevant. Trade one single share or the smallest microlot possible. The goal right now is not to make money. The goal is to observe your own madness. You need to start a trading journal. But not just a journal where you write down entry price and exit price. That's useless. You need a psychological journal. Before every trade, write down, why am I taking this? Am I bored? Am I experiencing FOMO? Is this exactly according to my plan? How do I feel right now? While you are in the trade, write down your emotions. Are your palms sweating? Are you staring at the P and L ticking up and down? Are you bargaining with God? After the trade, write down how you handled the result. Did you revenge trade after a loss? Did you get euphoric after a win? Do this for 20 trades. Then read it back. You will be horrified by what you see. You will see a portrait of an emotional gambler completely out of control. This awareness is painful, but it is the first step to change. You cannot fix what you cannot see. The final step in the transformation is changing how you keep score. The 95% keep score with dollars. I made $500 today. I had a good day. I lost $300 today. I had a bad day. The 5% keep score with process adherence. You need to grade yourself at the end of every day from A to F. Did you wait patiently for your setup? Yes, A+. Did you calculate your risk correctly before entering? Yes, A+. Did you accept the loss without emotion when it hit your stop? Yes, A+. If you do everything right and lose money, that is still an A+ day. Did you get bored, chase a random green candle, get lucky, and make $1,000? That is an F day. You reinforced bad habits. You got rewarded for bad behavior. That is the most dangerous thing that can happen to a trader. If you focus on the process, the money will eventually take care of itself. If you focus on the money, you will destroy the process, and the money will vanish. Check out this powerful video here to learn more.